Welcome back to the street. One of India's leading vacation home owners, Mahindra Holidays, reporting 250% growth in consolidated profit in the fourth quarter. That's a strong rise in occupancies and the highest ever membership upgrades. The Mahindra Group's hotelier business also reported 31.5% growth in revenue, while membership sales value rose 33%. And in the pre-open, you are seeing a minor blip in terms of downside, but they did track much higher in yesterday's trade. Kavinder Singh is MD and CEO of Mahindra Holidays and Resorts India, and he's joining us now for an exclusive conversation. Kavinder, thank you so much for being here. Just firstly, in terms of, I suppose, the prior quarter's success, how much of that in your mind was driven just by this, this pent-up demand, this need for travel following on from what has been, I suppose, a terrible past few years, all surrounded or as a result of the COVID-19 virus?
So, in a way, you're right. Everything helps. There has been a pent-up demand, but let me just bring some salient features of our business, because as you know that we are a membership business. We have been adding inventory by adding about 1,200 rooms in the last 2.5 years. And despite that, we ended up the quarter at about 85% occupancy. Now, that's quite a movement upwards, and the full year level also, we are tracking at 84% occupancy. So it's not just a blip, or it's not just a pent-up demand. We are seeing a secular trend across quarters for our business. And by the way, our holiday club resorts also turned around and delivered an excellent performance during the quarter with 6.4 million euro EBITDA. So I must say, all in all, a very good quarter, driven definitely by the positive consumer sentiment, and also the fact that we were able to add members above 5,000 mark after some time.
Exactly. Now, I was going to touch upon the fact that European operations actually turned into the green from the red that they had been in the quarters prior. But in that respect, are you concerned at all about, I suppose, the broader macroeconomic situation, if we're talking about Europe, for example? Because how much of your revenue flow from those memberships is from, the domestic Indian market, or how much is it from international? Because, there's different prevailing conditions. In India, it's expected to remain relatively strong on the growth front, whereas, in Europe and in the United States, for example, there's this prospect that we are going to see some significant economic contraction, and what that would then mean for the travel plans and willingness to have these memberships.
So I would say that something very positive happened. You know that in Finland has become a part of NATO. And I think in this quarter, Jan, Feb, March, which is typically a seasonally good quarter, Finland operations surprised themselves, because we had a timeshare growth of about 57% on a YOY basis. We have another business, which is spa hotels business, grew by about 19% YOY basis. Britishers, Germans, Dutch, they all came into the Lapland area for the skiing season. So despite the fact that there is a war going on, Russia-Ukraine war going on, the travel remained unabated in Finland, Sweden and Spain, which is where our operations are. So we remain quite positive despite the macroeconomic situation. And mind you, during this quarter, the inflation remained high, and technically Finland is in recession. But the good part is that the Finnish love to buy timeshare, and they find that the timeshare price, because they buy weeks versus buying a full home, a second home, turns to be much cheaper compared to buying a second home. So they love to buy second home, and they find that right now they can't afford it. And the timeshare in Finland offers an opportunity for them to have a second home, maybe for just a week or two. So this has actually helped Finland business significantly. And we believe that this trend should continue. As far as India is concerned, you're right. We do see good tailwinds. Leisure travel is booming. Airline fares are high, yet people are traveling. And we do see that and by the way, April, May, June quarter is looking very good in terms of occupancies as well in India.
I just want to stay in Europe for just one more second. I really do want to get to India. But just in terms of Europe, there's been a lot of discussion about, wage growth remaining incredibly high. How has the inflationary wages pressure impacted you on your cost base? Has it been manageable in some respect, being able to pass on the increased costs to your customers?
So interestingly, two things have happened, at least where we have large operations in Finland. First of all, the energy levels, the energy prices have come off their peaks. And that was a big concern area. Parallelly, the team obviously worked on saving energy through various means. and that they have, again, obviously, those benefits are flowing through even in this quarter. So, and parallelly, because there is inflation, there have been wage rises, which have been mandated by the Finnish government, and most of the industry have given wage rises, and as a result of which, the spending power is coming back.
Now, in terms of India, because obviously, in the industry that you're in, you must be very pleased with the fact that you're going to get significant investment when it does come to the major airports. All of the airlines are buying more planes. Is that aligning with your own plans? Are you looking to expand operations significantly? Because the 2025 targets, or even moving forward into 2023, appear to be on face value that significant that this should be realistically a boom period for your holidays and resorts business.
You said it right. We have plans which are in line with the way. By the way, the government of India has declared tourism in mission mode. So there are 50 tourist destinations that are going to be developed. And you rightly said the airports, the roads, all infrastructure is getting a big boost, and we are going to be significant beneficiaries. So keeping this in mind, we have upped our ante, and we have planned a capital expenditure of about 1,800 crores Indian rupees. And that's something that's in motion already. We are able to see a pipeline of about 750 keys right away, and we are planning to scale that up to about 1,600 keys as we move forward. So we do expect 3 to 4 years. We are today at about 5,000. We should be touching about 6,500 or thereabouts. Obviously, in about 3 to 4 years, it could be even more, because as you rightly said, the 2025 guideline, which we had given of 5,500, is well within reach, and we will cross it earlier than what we had planned.
And a lot of growth potential there as well. Just before we go, I wanted to ask you, because you have properties everywhere, what are you seeing right now when it comes to ASEAN in terms of occupancy, the likes of Cambodia, the likes of Thailand, because a lot of attention has been placed in the expectation, I suppose, coming via the way of China travel and China tourism.
So I must say that in this quarter, I should have mentioned that we have added multiple destinations. Apart from 5-6 destinations in India, we ended up adding Maldives, Cambodia, Vietnam, Abu Dhabi, and Nepal. So we have actually increased the repertoire of our destinations for our members. And by the way, we crossed the 100 resort mark this quarter. We ended up having 102 resorts in our fold, as well as about 4,940 keys, roughly 5,000, 282,000 member base, and this excludes the Finnish operations, where we have another 33 resorts.
Kavinder, we're going to have to leave it there. Thank you so much for your time today. Really do appreciate it, and best of luck, especially when it comes to the Indian growth prospects that are absolutely phenomenal. Kavinder Singh of Mahindra Holidays and Resorts, India. Staying on the theme, Indian markets have also